What's up, Squares? Harold Perkins here, and what if I told you that the loan program that you pick could save you 5, 10, or 25% off of the purchase price for the house that you want to buy? Yeah, that's right. Your loan program could influence a seller to accept your offer at a lower price than other buyers might offer for that same house. Well, how can this be? Let's take a look at a study from the University of California, San Diego that shows that over the past 40 years, cash buyers have paid an average of about 12% less for a house than those using a mortgage.
I don't know, 12%.
12%? It's real!
But wait a minute. I said it was the loan program that could save you money off of the price of the house. A mortgage is not the same as cash. Well, now it is. Today I'm going to talk to you about GalaxyLendingGroup's cash buyer program. It's pretty simple for you as a buyer. You go find the house that you want to purchase and you negotiate the price with your real estate agent and write your contract as cash. We will provide the cash less your planned down payment for you to close on your contract in as little as 11 days. You own the house now. Then we will place the financing on the house after you close, which is how we'll recoup the money that we paid up front for you. Obviously, there are qualifying terms and conditions. Not everyone will qualify and not every house will qualify. So let's go into some more detail. The first step is we'll get you pre-approved for your financing like normal. There are some loan program restrictions. The cash buyer program is only available for conventional loans with at least 5% down. It's not available for our FHA, VA, or USDA buyers. Once you're fully pre-approved as a buyer, the next step is for us to approve the property before you write an offer. You'll send us the address of the house and the list price. We perform an automated valuation of the house to make sure we agree with the price that you're going to offer. This only takes a couple of hours. When we have approved the property, we will send a letter and a bank statement as proof of funds to show the seller. This will show them that you have the access to the cash in addition to your down payment to close on your contract. Yes, of course, there is a cost, but it is only a 1% fee of the amount of cash provided upfront for you to close on your purchase. That's it. So if you were the average and got a 12% reduction on your sales price because you were cash, but it cost you 1% to do it, well, you're still 11% ahead. On a $300,000 house, you would be spending $3,000 to save $36,000. That's a good return on investment. Are there any risks to the buyer? No. You'll remember that you close on the house with cash, but then you'll do a refinance to pay us back for that cash. But what if you lost your job in between the time that you closed on the house and you refinanced? Or what if there were some other very extreme, unforeseen circumstances like the death of one of the borrowers? We have you protected with a money-back guarantee. If you are unable to secure the loan for your refinance, we will buy the house back from you for the full purchase price. You'll get your down payment and the 1% fee returned to you. Of course, this only happens in the most extreme circumstances, but it's nice to know that you have that safety net just in case. Or what if when you refinance, the appraisal value comes in lower than what you paid in cash? We have you covered there too. You'll remember that we did an automated valuation of the house to approve the sales price before you wrote your offer. Because of that, we're taking the risk if the refinance appraisal comes in low.
My house, for example, is this adorable little cottage, whereas other people might have homes that are bigger, like that one.
We will cover the difference between the refinance appraised value and your sales price so that there is no impact to your qualifying or your loan terms when it comes time for you to refinance the house. Of course, there are terms and conditions for this too, but the more likely scenario is that the refinance appraised value will come in much higher than what the sales price was when you bought the house. So let's say that you planned on purchasing a house with financing for $300,000 with a 5% down payment. but you decided to use our cash buyer program and you were able to negotiate the price down to $255,000. That's 15% below asking price, which is an above average discount, but not impossible. So when it comes time to refinance, you owe $240,000 on a house that's worth $300,000. This means that you have 20% equity in the house. That means that you don't pay PMI. Yeah, that's right. You just bought a house with 5% down, but you immediately have 20% equity in the house, which means you don't have to pay PMI. Ever. Nice. Of course, everybody's individual circumstances may be different, so ask me questions in the comments below or message me on any of my socials. I'll write you back right away. And if you know anybody that's thinking of purchasing a home or you think that they could benefit from our cash buyer program, then please make sure to hit the like button so that they can see videos like this too. Later, nerds.